The complaint demonstrates that Donald Trump falsely inflated his net worth by billions of dollars to unjustly enrich himself and to cheat the system, thereby cheating all of us. He did this with the help of the other defendants, his children. Mr. Trump and the Trump Organization repeatedly and persistently manipulated the value of assets to induce banks to lend money to the Trump Organization on more favorable terms than would otherwise have been available to the company, to pay lower taxes, to satisfy continuing loan agreements, and to induce insurance companies to provide insurance coverage for higher limits and at lower premiums. Attorney General, broad and special powers to go after persistent and repeated fraud and illegality. As part of demonstrating illegality under that section of Law 6312, we show that they violated several state criminal laws, including falsifying business records, issuing false financial statements, insurance fraud, and engaging in a conspiracy to commit each of these state law violations. We believe the conduct alleged in this action also violates federal criminal law, including issuing false statements to financial institutions and bank fraud. And we are referring those criminal violations that we've uncovered to the United States Attorney for the Southern District of New York and the Internal Revenue Service. As a result of these violations, we are asking the court to, among other things, permanently bar Mr. Trump, Donald Trump Jr., Ivanka Trump, Eric Trump, from serving as an officer or director in any corporation or similar entity registered and or licensed in New York. To bar Mr. Trump and the Trump Organization from entering into any New York State commercial real estate acquisition or from applying for loans from any financial institution in New York for 5 years. To pay for the financial benefits obtained as a result of the persistent fraudulent practices at an estimated $250 million. And towards the end of my remarks, I will go into the other relief that we are seeking. At the center of the year-long financial scheme were the statements of financial condition that were prepared annually by and for Mr. Trump, specifically from 2011 to 2021. These statements were compiled by the Trump Organization executives and were issued as a compilation report by Mr. Trump's accounting firm. The statements are explicit that the preparation was the responsibility of Mr. Trump. We're starting in 2016, the trustees of his trust, Donald Trump Jr. and Alan Weisselberg, for the sole benefit of Mr. Donald Trump. Each statement was personally certified as accurate by Mr. Trump or by one of his trustees as part of the loan process, with the intent that the information in the statement would be relied upon by banks and insurers. Mr. Trump and Mr. Weisselberg would meet to review and approve the final statement every year. Mr. Trump made known through Alan Weisselberg that he wanted his net worth reflected on the statements to increase, a desire Mr. Weisselberg and others carried out year after year in their fraudulent preparation of the statements. And when asked about these meetings under oath as part of our deposition, both men, Mr. Trump and Mr. Weisselberg, invoked their Fifth Amendment privilege against self-incrimination, and they refused to answer. When asked under oath if he, Mr. Trump, continued to review and approve the statements after becoming President of the United States in 2017, Mr. Trump, again, invoked his Fifth Amendment privilege and refused to answer. Over the course of our investigation, we found that Mr. Trump, his children, the Trump Organization, created and used more than 200 false and misleading asset valuations on his statement of financial condition over that 10-year period. They issued statements that were in clear violation of general accepted principles in the general accounting principles in the United States, despite representing that these statements were prepared in accordance with these principles. Some of the common tactics they used include representing that Mr. Trump had cash on hand that he did not have, ignoring critical restrictions that would significantly impact property values when setting valuations, changing the methodology used to value properties from year to year without reason or notice, and using vastly different methods to value different properties even in the same year, and including tangible items such as brand premiums, the Trump premium, when calculating an asset's value, despite the fact that they ignored the advice of outside professionals. They also ignored the advice and appraisals of outside professionals, despite claiming those individuals provided certain figures. For example, they received a series of bank-ordered appraisals for the commercial property at 40 Wall Street in New York City that calculated the value of the property at $200 million as of August 2010, and $220 million as of November.
Wait, hold on. I'm sorry. There's other stuff going on in the background. Did he just tell people to inflate the fuck out of all of his assets? Is that what he's saying? Like, I'm worth $1 million. Like, how do you know that? Well, I have a Pixel 6. Okay, well, your Pixel 6 is worth $1,000. This is Destiny's Pixel 6. It's worth $10,000. Oh, well, my bad. True.
2012. Yet, in his 2011 statement, Mr. Trump listed 40 Wall Street with a value of $524 million, which increased to $530 million over the next 2 years, more than twice the value calculated by the professionals. Even more egregious, the $500 million plus valuation was attributed to information from the appraiser who valued the building at just over $200 million. Another deceptive strategy they employed was to use objectively false numbers to calculate property values. Take Mr. Trump's triplex. You know, the triplex apartment in Trump Tower on Fifth Avenue? Mr. Trump represented that his apartment spanned more than 30,000 square feet, which was the basis for valuing the apartment. In reality, the apartment had an area of less than 11,000 square feet.
Bro, well, hold on. Maybe he was counting, maybe there's a little bit of verticality there, you know? Maybe he put some,
Thing that Mr. Trump was well aware of. And based on that inflated square footage, the value of the apartment in 2015 and 2016 was $327 million. To this date, no apartment in New York City has ever sold for close to that amount. Tripling the size of the apartment for purposes of the valuation was intentional and deliberate fraud, not an honest mistake. Mr. Trump was intimately familiar with the layout of both the building and the apartment, having personally overseen the construction of both. Despite his sworn testimony before invoking his Fifth Amendment privilege, Mr. Weisselberg conceded that using the false square footage improperly inflated the value of the apartment almost threefold. Mr. Weisselberg admitted that this amounted to an overstatement of, give or take, $200 million. Misrepresenting the size of the apartment was only one of the many ways that Mr. Trump intentionally misvalued his asset for the purposes of increasing his net worth and inducing banks to offer more favorable terms. Mr. Trump also routinely ignored legal restrictions on development rights and marketability on properties that would significantly decrease property values. For example,
how fucking funny would it be at the end of all of this that it comes out that Donald Trump, like truly, when equity, debt, everything is taken into consideration, he has like a net worth of like $45 million. That would be like, it would be so fucked.
Let's take Trump Park Avenue in New York. This building contains both commercial and residential space. The unsold residential condo units owned by Mr. Trump and the Trump Organization represented the lion's share of the reported value for this property. Mr. Trump and his children intentionally ignored legal restrictions on some of the units that would have drastically changed the valuation. Specifically, the 12 of those units were actually rent-stabilized apartments. A professional appraiser valued those 12 units at around $750,000, noting that the rent-stabilized units cannot be marketed as individual units for sale because the current tenants cannot be forced to leave. Despite this professional valuation, and Mr. Trump knowing full well the legal restrictions the 12 rent-stabilized units were valued, he valued them collectively on his statements at $49 million. That is about 65 times the appraised valuation.
Jesus.
Mr. Trump also blatantly ignored legal restrictions at Mar-a-Lago. Mar-a-Lago was valued on the false premise that it sat on unrestricted property and could be developed for residential use. However, Mr. Trump knew that Mar-a-Lago was subject to a host of onerous restrictions and limitations. Mr. Trump himself signed deeds sharply restricting changes to the property and donating his residential development rights in an effort to get a tax deduction and later to lower his property taxes on the property. The deeds also require Mr. Trump to donate over 23% of Mar-a-Lago's value to the Historic Trust for Historic Preservation if he ever sold it. Despite these significant restrictions, Mr. Trump valued the property based on the false premise that it was an unrestricted residential 18-acre plot of land that could be sold and used as a private home. In fact, the valuations represent that these restrictions don't even exist. The club generated annual revenues of less than $25 million and should have been valued at about $75 million. However, Mar-a-Lago was valued as high as $739 million.
Jesus Christ.
Mr. Trump
used
inappropriate schemes to inflate
oh my
the value
God.
of golf clubs. He valued the clubs based on their fixed assets. In other words, the money spent to acquire and to maintain them, despite being informed by valuation professionals that this practice was inappropriate for a club operating as an ongoing business. He again added a brand premium when determining the value of the club, but claimed in his statements that he did not. And he inflated the value of unsold memberships, often by hundreds of thousands of dollars per membership, even in situations where the memberships were given away for free at Mr. Trump's direction. Inflating his reported
Jesus, dude, I feel bad when I round up on my taxes. When I'm like, I spent $1,872 on that trip, but I bet I could say I spent $2,000. You know, give me an extra $100 tax deduction here, save like $35. You know, I think I could do it. Damn, Trump was like that on fucking crack. Guys, if you're a D student and you're gonna cheat your way through school, you cheat yourself to a C+, okay? If you're a B student and you're cheating your way through school, cheat yourself to an A-, okay? Don't be a D- student and cheat yourself to an A+. Don't do this. Why would you do something this fucking stupid? Oh my God. Jesus Christ. What is he doing?
Birth was just the first part of the scheme. He then used these false statements of financial condition for his own personal gain. Mr. Trump and the Trump Organization have obtained hundreds of millions of dollars in real estate loans and insurance coverage using these statements. Mr. Trump was able to secure a much more favorable loan term.
Can Careful, that rounding up was in a video game, right? This is gonna be a lot. Dude, if I ever got audited, I'm pretty sure I would fucking get money back. My effective tax rate in this goddamn fucking country is like 42% or some shit. I pay so much in fucking taxes. The IRS can come and try to milk more from my dead body. They're not getting another fucking cent into me. My taxes are on the up and up. Report me! Report me! Do it! Waste your fucking time. Bring the auditors into my house. They're gonna look at the auditor's gonna open my tax file. He's gonna see how much money I made, and he's gonna see how much I paid in tax. And he'll be like, you know what? Mr. Bunnell, we're gonna leave these alone because it's probably good. And they're gonna walk the fuck away, okay? Fuck taxes in the US. I pay all my shit. And I'm pretty sure I'm paying too much, okay? Fuck this bullshit ass country. Well, I'm in Florida now, so I don't care as much. Fuck California taxes though. Fuck that shit. I had a business filed in Nebraska. I lived in California. I did the foreign re-domestication of my business so that I could pay all of my business taxes appropriately, all that shit. All my shit is on the up and up. Suck my fucking dick. Report me, motherfuckers. Try it.
By personally guaranteeing the loans based on his reported net worth, as reflected on his statements of financial condition. These statements were key, integral to Mr. Trump and the Trump Organization's ability to secure loans for a number of properties, including the old post office in Washington, D.C. Mr. Trump's statements were first submitted to the federal government to demonstrate his financial status, his net worth. He then engaged with Deutsche Bank to obtain a loan to redevelop the property. Mr. Trump was able to obtain much more favorable loan terms by personally guaranteeing the loans. So in 2014, he secured a loan from Deutsche Bank for $170 million. And as you know, in May of 22, Mr. Trump and the Trump Organization, they sold the post office, the old post office property, for $375 million, resulting in a $100 million net profit. Office loan property. His financial status, his net worth. He then engaged with Deutsche Bank to obtain a loan to redevelop the property. Mr. Trump was able to obtain much more favorable loan terms by personally guaranteeing the loans. So in 2014, he secured a loan from Deutsche Bank for $170 million. And as you know, in May of 22, Mr. Trump and the Trump Organization, they sold the post office, the old post office property, for $375 million, resulting in a $100 million net profit, which was the result of a loan he was able to obtain through the use of false and misleading statements of financial condition. Separately, Mr. Trump and the Trump Organization saved an estimated $150 million by receiving favorable interest rates that were only provided based on the false and misleading statements of financial condition. We also believe that he illegally saved millions of dollars in federal tax benefits, conservation easement donations related to Seven Springs in Westchester and the Trump National Golf Club in Los Angeles.